In this video, we're going to talk about how to use price action rules to help us identify high probability setups and to help us identify the direction bias of the market. So we're looking at S&P 500 M&A futures. This right here is the structure right now that we have to analyze. And I can see that every single major high and low is lower and lower. So we have some form of downtrend, which means as a price action trader, I need to locate the key entry point, which is I have to locate the channel. And we have a nice downtrend working lower. You can see prices keep trending lower, and this is only confirming the fact that we are indeed in this bearish channel. So as a price action trader, what I have to do is I have to sell only when the correction phase is going to end at the key entry point, either the 21 EMA or the trend line, and sell a high probability setup. You have a new low first entry short, second entry short. Of course, I cannot take second entry short because we're not full at the key entry point, not full at the EMA. It is a doji bar. Market is correcting. We're finally touching the EMA, and now we have a very nice signal bar. We take one tick high, reverse down, and this is also somewhat of a triple test, and this is new high because this is the correction working higher, kind of like a first entry long failure, second entry long failure. And because the trend is down, the buyers are going to get trapped. It visually looks like one leg up break, second leg up. So there is a visual aspect of the two leg up pullback, and there is a resistance. This is great high probability setup, great signal bar. There's going to be a break below this bar, so we're going to enter here. Stop loss goes one tick above the signal bar. However, this is exactly around the open. So we can't really take it because right around the open there can be spike in volatility, little fake out trap. I can mark it mainly educational perspective, but since it is exactly at the open, we can't really take it. Great setup though, two legs. We're correcting, so I have to redraw a brand new uptrend. And right now, nothing is changing. I'm going to reset the count once again because we have a new low that is lower than this. We have a new low, first entry short, close outside the channel, and we have a second entry short. Now we have a break, a new high, so the uptrend played out, good. We're getting rejected at the key entry point at the trend line. We have a great signal bar. So there's a new low, first entry short, pullback, second entry short. You can see it is confirming our predetermined trend line. This is the key entry point, correction phase is ending, and this is great high probability setup. Once prices are pushing below EMA, we are still looking for a lower high that never formed because now we have new low. We have to reset the count and market keeps trending lower. So this is exactly how price action reacts. However, we can see that now trend channel line is not holding and we have small overshoot. We broke the trend channel line, which means we can have stronger pullback in the opposite direction. So if there's going to be a second entry short at the EMA, I will skip because I have overshoot and I can have stronger correction in the opposite direction. Now, as you can see, market is very, very strong. So I definitely have to respect this correction. I was looking for some channel. This feels a little bit too broad. This is a little bit tight. Let's see. Either way, I can't really sell because once again, overshoot can generate stronger pullback. The uptrend is still in play. Market keeps working higher, keeps working higher. You can see there is no denying this is acting exactly as you would expect overshoot to react. And because we retraced so much of the downtrend, once we retrace over that 61% of the downtrend, we're no longer looking for new extreme. So now I'm going to adapt to this brand new uptrend because this is such a strong reversal, which can definitely happen during overshoot. EMA keeps pointing up, strong uptrend. So I'm forgetting about new low for this downtrend, okay? Because the overshoot can reverse course of the market. So this is normal. And this is such a clean uptrend working high. There is no denying that we're no longer looking to get the new low. And I'm adapting now to think about long opportunities, okay? It's simple. Uptrend is in play. So now I'm not counting from lows. I'm counting from the highs for two-legged pullback at the EMA. New high, first entry long, pullback, and now we even have a second entry long. Now, when I'm watching this, I can also see that we have some nice market geometry, something like this, because you can see how nicely these candles are fitting here. And this is one of the advantages of tick charts. Tick charts are a little bit more symmetrical. They allow us to see more detail. So this is why we prefer tick charts rather than time-based charts. Price action still works in every market, any time frame, but tick charts are the best. This is a new high, first entry long, second entry long. We expect new high to be tested, okay? The steeper channel needs new high. The spike in the channel is supportive pattern. The signal bar is rather neutral. Not a bad setup at all. I can mark it. because the context is solid. Key entry points, 2 legs down, break, a new extreme for the correction, and this is a strong bullish uptrend. We can't even touch the EMA. Your stop loss remains safe because we keep our stop loss one tick below or above the signal bar. And you can see the stop loss was never hit. Now we have high-low confirmation setup. I was getting so ready to go long here, confirming the second entry long. We are still above the EMA, above the trend line, or at least this is what it looked like when the signal bar was forming, closing here. But at the last second, it reversed down. It closed rather weak. I didn't take it. It's a shame because I was really about to take it. High-low confirmation second entry long. We still need to get new high. You know, there's potential small support forming. And the second entry long traders, they're still in, so it's going to go higher. But simply the signal bar was weak. I can mark it because context is solid. It's a shame the signal bar didn't close stronger. If there's a stronger bar, this is a no-brainer high-low. The market keeps working higher. And you can see right now, there is some resistance being formed. So I definitely cannot be going long now into these highs, because why are we struggling to test the new high? We have double top, which can be also considered enough. So if you're not out here, if you're not buying at the bottom, I wouldn't go long so far up. We're going way too sideways. Now all of these scalps ended up working. As you can see, breaking new high, uptrend played out. So both second entry long and high-low worked. Breaking new high for all channels. The spike in the channel, the steeper channel. So right now I'm going to pause, looking to go long. I'm not going to go long here off the support because all uptrends played out. And we can have correction or reversal. There is no trigger anyway. Market is breaking lower, so I'm going to draw the short-term downtrend, something like this. We have small overshoot. So this is what I do as a price action trader, trying to just follow price action, drawing these channels. You can see the trend line will tell you exactly what can happen. The overshoot can tell you, okay, we can have stronger pullback in the opposite direction. Breaking new high will tell you, okay, we can have bearish reversal. So trend line rule is powerful. Now we have small overshoot, break higher. This is a little failed breakout out of this congestion. But because of the overshoot, I'm a little bit hesitant to sell. Can get a lower high. Yes, we have technically a lower high confirmation set up here if there's going to be break below this bar, but this is lower high where we are selling the breakout out of the congestion, and as you know, most breakouts will fail. As you can see, we broke higher, breakout fell to the downside. This downtrend needs to get new low tested. I can also measure the one leg down, pull back, second leg down. So this is what we expect. We expect new low to be tested. Problem is 1, 2, 3, 4, 5, 6, 7, 8, 9 bars stay right next to each other. I can't really sell this because I need to see the breakout, pull back out of the congestion, and if the EMA and the scale was going to hold, I can enter a failed second entry long. Very close. This was almost first entry long, second entry long failure. Breakout, pull back below EMA. We need to get new low, but I don't have a break above this bar, so technically there is no second entry long. It's a shame. Had there been just one tick high reversal down, you can take it, but like this, there's simply no entry, so I cannot break the rules. Break, new extreme, and the downtrend played out. Now we have another second entry short, but we can't really take it. Drawing wide the channel is tempting, but remember, we just had a break and pushed to a new extreme, and there is visual aspect of two-legged pullback. So when I have a situation like this, when it looks like too much like 2 legs down, I need a lower high. Second entry short is not enough because we just had a break in extreme, 2 legs down. There is no lower high. Market continues to go higher. I'm also going to redraw small consolidation because EMA is flattening. We bounce off of these lows. I'm going to redraw the uptrend, something like this. So once again, I'm going to follow the short-term trend line. We are part of consolidation, potential overshoot, first entry long. Market keeps working higher. We're breaking below EMA, so now that I can see that the structure is acting as a trend range, I'm going to play this as a break and a new high. It is also tempting to draw it a little bit wider, like it is still in play, like this. Problem is, it doesn't fit the structure. All uptrends played out to the left. Now we are part of consolidation. It's unlikely the market would go higher after all uptrends played out. And this push below EMA is basically solidifying the fact, okay, we are in a trend range. So I'm going to adapt to break and a new high. I'm going to draw some downtrend working lower. Can get a failed second entry long. Well, yes, new high. One attempt to go long, failed. Second attempt to go long, failed. Problem is, the signal bar has a massive tail at the bottom. Horrible tail here. You know, context is good for failed second entry long because uptrend played out. We're gonna go back into trend range, but the signal bar is too weak for me. I simply can't take such a sketchy bar. You know, context is good, but a little bit more aggressive on my chart. But I like to see that the market keeps working lower. Perfect. Because the market keeps working lower, this is confirming the fact that we have a nice downtrend. You can see how EMA keeps pointing down. We're going back into consolidation. Good. So we traded up, break a new high, trend line rule played out. We traded down, price action is correcting, and now we have new low, first entry short, pullback, second entry short. And this is not only second entry short of two key entry points, EMA and the trend line. This is also mini triple test, multiple test, because you can see prices are reacting here. Small price level resistance is important. The market makers are deeming this price level worthy. New low, first entry short, second entry short. Great signal bar, triple test, second entry short. Textbook setup. I tried to take this setup myself. There was no fill because it got lower, unfortunately, but this is a great setup. Everything aligned, two key entry points. You know, simple price action, just navigating these channels. But this was super hard to catch. It just got lower. Can get a lower high. Yes, but on my chart, it is too bullish. I can't really take it. Market keeps working lower, keeps working lower. Now we have new low, first entry short, second entry short. I'm gonna extend the downtrend like this. Once again, as you can see, once you identify the context and the key entry point, we reset the count at each new low, and we're looking for two-legged pullbacks. Okay, if you delete the EMA, if you delete the channel, it's quite hard to understand what the market is doing. But price action traders were using these tools to help us visually see better what the market is going to do and where the market is going to go. So this is once again new low, one leg, second leg up, first entry short, second entry short. Same situation as we have here. Once again, another price level that the bulls are struggling to break, but horrible bar, inside bar. I can't just take it on my chart. Terrible signal bar. You can see it clean to like a pullback, but I simply cannot take it. The market is working lower, and now we have break and push to an extreme. Now we are working high, we're correcting. I'm going to draw the uptrend, and now I have a little bit of a dilemma because this push to an extreme is looking very strong. We can't even break above the EMA here. If I'm going to take a look at 10,000 tick chart, there is a good case for just slightly wider channel that ends up having overshoot like this. So it's not easy right now to understand what exactly is happening, and this is going to be normal. Okay, as a trader, there are going to be areas that you're going to be confronted with where you don't know exactly what is the context or what is the pattern. That's normal because the market is just developing. You need a little bit more information. So we're not pattern traders. Once I'm deciding between the channels and if there's a break in extreme or wide channel, this means this is area of development, and I have to be extra cautious, and I cannot jump into conclusions because now we have a lower high here, which is quite tempting if we analyze it. But like I said, is there break in extreme? What if there's going to be a bigger channel because there's break in extreme, or if there's overshoot, we can have stronger correction in the opposite direction. So I really don't feel like the lower high is enough. If you took it, I can see why. Not a horrible setup to get trapped on and end up failing, but hopefully it makes sense why this area is a little bit unclear given the fact that we can't really know exactly if this is overshoot or breaking extreme. But if you took it, it's a small bar, not a bad idea. Trading is about taking a chance. You have a break in your high for the uptrend, and this visually looks like two legs up. So we expect new low to be tested, but because there's overshoot, I cannot really right now sell above EMA. I can only sell this break below EMA. We ended up getting second entry long at the EMA, which was confusing. I was really thinking, okay, there's a big chance for wider uptrend, but at the same time there's a chance for wider downtrend. So I played it safe. I didn't take anything, just waiting here, waiting here. The push below EMA is right now really looking nice, like we may test the new extreme. but I can't really sell above EMA. Now you have some setups at the top of this consolidation, but this is so stacked. EMA on these bars. We're breaking lower. Okay, so now it's obvious we're about to test the new low for the downtrend. So I would like to see a lower high breakout pullback and then going lower, something like this. But there is no lower high, no breakout pullback. We have a break and push to new extreme. So right now I'm gonna mark breaking new low. I'm gonna mark breaking new high. So you can see these two legs are broad, overshoot, generate a stronger pullback, push below EMA, break, and new extreme. So right now we can have correction or reversal. So that's what's gonna happen. First entry short, second entry short, and a massive break below EMA. So hold on. Already not a good sign for the bulls. This is not looking like a reversal. We have a lower high, which many times, if the trend is strong and we push back below EMA, lower high is actually a confirmation of trend continuation. So this is why this setup get a little bit tempting to take when you're watching this live, because it's a lower high of second entry short. The same thing is happening here. So you can consider, but once again, we just had a break in new extreme and this was quite broad. Break the new extreme. There's a chance that we may continue working higher. Decent setup once again if you risk. The signal bar is small, but I really prefer in a situation like this a filled second entry long. You are still okay because your stop was never hit, so the trade ended up working, and now we have new high, first entry long, visual, second entry long failure. Once again, small resistance here, and this right here is a filled second entry long, and it's a stronger setup. That's the ultimate trap, and this is great setup because now it's obvious that the market is not going to go higher. The bearish continuation is confirmed. You have a break, another push to new extreme, and now the market is too late. We're about to close. So this is the overall structure for today. I really like days like these where you simply just follow every single trend individually and it works perfectly. You can see overshoot, predictable reversal, breaking new high, breaking new low, breaking new high, nice downtrend. Once again, another overshoot, two-legged pullback, and push to new extreme. So a lot of decent setups, good price action day. It wasn't a horrible choppy day, and I hope you had a good trading day. So I'm gonna wrap it up. I'm gonna talk to you next time. Good luck your trading.